Where are we in liquidity right now? How much of some of the volatility are we seeing is because people are withdrawing liquidity?
Yeah, David. I mean, that is part of why these markets are so volatile. There is no conviction in today's markets, and so what happens is markets tend to. We always look at top of the book liquidity, meaning in the equity market, how much can you execute at a price? And much of the time this week, it was a couple of $1 million worth. That number is usually many, many multiples of that. What happens is people, when you get all of these ambiguous indicators, where is growth going to be? How aggressive the Fed going to be? Gosh, now I just threw Russia-Ukraine into the equation. The liquidity in the markets go away. And part of why the liquidity in the markets go away, people always think about what's working in my portfolio, what's working as a hedge. And you think about what's happened this year. Bonds here, before today, bonds are going down in price. Equities are going down in price. How do I think about that? And how do I think about a hedge? Because you get something like the Russia-Ukraine thing, and all of a sudden treasuries rally. So whereas I'm worried about interest rates being higher, so you got to be careful about that as a hedge, because now they start to rally. It creates a dynamic in the market. There's not enough conviction. There's not enough hedging ability. There's not enough mitigants to manage risk. So you just got to bring risk down. You got to run smaller position, higher levels of cash. And that means the liquidity in the markets, because people don't have conviction, because people aren't putting as much money to work, then you have a market that is skin deep, and you got to be really thoughtful about how you want to execute in these markets.
Afsaneh, I wonder about you as an investor, because you invest in the longer term. It looks like we're going through a change in the paradigm right now, one of a lot of support, monetary and fiscal support for the markets, and it looks like we may be going away from that to neutrality or even some tightening. What does that mean for you as an investor? What are good investments in that climate? What are bad investments?
You certainly need to move to more active investment in this kind of period. And as Rick said, if we go back to pre-COVID days, we already were having some of these liquidity problems, right? There were, that was what we used to talk about before COVID. And of course, it's coming back with a vengeance. And so looking forward into the markets, as we're seeing, interestingly, global markets are doing better than the US this year. And even places like Europe and emerging markets, despite all the things that are going on, in both have been doing much better. Small cap. And then again, I think with what's going on geopolitically, I'm actually bullish on clean energy, because people are going to be investing in it as a hedge to what is going on right in front of our eyes right now.
Afsaneh, I want to pick up on the question of geopolitics here for a moment. At the very end of the week, on Friday afternoon, really the markets got very concerned, as we heard from the White House, that it's really decidedly possible, not certain, possible that Russia will be invading in some form Ukraine. We've talked a lot about inflation, whether it's transitory or more permanent. Is the effect on the markets of Ukraine transitory or not?
I think what happened this afternoon, and by the way, Jake Sullivan was so careful with his wording in the sense of what may or may not happen over the next few days or weeks, is that it increased uncertainty and volatility in the markets, right? So if we thought that, there were some people this morning and yesterday talking about 50 basis point increases, I think that is the sort of thing that is less likely to happen when you have a Ukraine happen or other events that might come up in the near future like that, because it just increases uncertainty. And the Fed, the one thing that it has shown is that it wants to go through this transition in a relatively stable way to the extent that it can manage. So I would assume that that is what they're going to be focused on.
Rick, what about the geopolitics of investing? We've seen a pattern here of the U.S. being the place to be compared to the rest of the world. A lot of people are expecting, as we turn here, it's going to go back to Europe. It's going to go back to emerging markets. There are going to be better investments there, in part because the valuations are lower. And by the way, their monetary policy in a lot of EM countries is quite different. Does this sort of geopolitical conflict have the potential to reverse that?
Listen, I'd say a couple of things. First of all, this is a pretty complex situation. Your question, Afsaneh, about transitory. My sense is this isn't going to get resolved. There's not going to be a checkered flag of it's free to get to move forward. So I think this is going to be with us for a period of time. And markets don't like that. Markets like to put things in boxes and understand, like, is the Fed hawkish, dovish, is the economy good, bad? They just want to put things in boxes. This won't be able to be put in a box for a period of time. So how do you invest relative to that? Listen, I mean, we like still investing in the U.S. We definitely believe the growth paradigm is better. You've clearly got a moving Fed, but you've still got so many opportunities, and particularly what's happened the last few weeks and things like technology stocks coming under such dramatic pressure. So we still prefer the U.S. In Europe and parts of emerging markets, there's still opportunities, but you've got to watch this play out for a period of time. So, we started to dip our toe into emerging markets, but very, very slowly. And the view was, gosh, we've got some time. A, you need to see where the Fed is going to play out. And B, when you have situations like this, you've just got to be really careful and slow to enter. And, take where you think there's convexity to the upside, you think there's real upside, dip your toe in a little bit, but you got to be careful about it because this could take a little bit of time to play through.
And definitely, if you have countries that have large amounts of US denominated debt, you want to be careful with those. If you have countries that are commodity based, you want to be, they're more interesting during this period, regardless of, what the commodity is. So you really have to be very actively looking at things. I think the period of passive investing, which we had over the last 10 years, is kind of relatively behind us. It doesn't mean you don't do any passive investing, but active investments become more important as part of your portfolio.
So Rick, let me try to reach beyond my can here. Is it possible that we should have seen through the markets in part some of this coming in what Vladimir Putin has done since 2014, his first invasion of Ukraine, what he's done with his economy, in terms of things like dollar-denominated debt that Afsaneh just referred to, his foreign currency reserves, he's got a much stronger position today than he did back in 2014.
Yeah, the irony, like you say, David, is the fiscal situation in Russia is arguably better than it's ever been. It's actually arguably one of the best fiscal situations that you see in the world today. And so in a stable environment, investment in Europe makes some sense. The question is today, how long before we see that again? But you're definitely right. I mean, the fiscal situation is, and by the way, it's part of why it was one of the darlings for a while. It was the darlings of the emerging market, both currency, interest rates, et cetera. And then like a lot of things in emerging markets these days, whether it's politics, whether it's fiscal dynamics, whether it's the amount of, as Afsaneh said, the amount of debt burden, a dollar denominated debt burden, those things have been shifting around. Despite emerging markets is a good place to invest, but you got to be deliberate and you've got to be well measured in terms of where you're going.
Afsaneh, I hate to keep you short on oil, but how much of this is the price of oil? Because that's really good for Vladimir Putin right now. No
question that the current prices are helping Putin, put away money, but also I don't think they will last long. You're going through this winter, and you're going to be in March, and we're going to be on the other side of it.